When you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon, welcome to GrainTV. My name is Cody Bills. This is Logan Burgess. Today is the 25th, a Wednesday. We had the market moving lower here for corn, down 2 cents for the July contract. Soybeans trading up 2 1/4, and wheat in Chicago trading up 4.5 cents. Now we are entering the harvest season for that SRW wheat. It is kind of interesting here. Chicago wheat showing a little bit of relative strength, something we don't normally see during harvest. Logan, what's the reason for it?
Well, it seems like there are some quality concerns right now, combined with some improving demand side numbers as well. If you take a look at this chart here, this shows out of the Gulf SRW wheat for July delivery, and as you can see here, really since about the 10th of June, we've seen basis increase about 20 cents, and as you kind of indicated, Cody, that's an abnormal trend to see when we're in the middle of harvest. One thing that's helping things out is a lower quality than expected out of this crop, particularly following the heavy rains last week. Sounds like some wheat has been coming out of the field that doesn't quite meet export quality, so as a result, the number 2 SRW wheat is getting bid up a little bit at the Gulf. So that's something to keep an eye on here moving forward. It did seem to help out the wheat market in today's trade. You know, as you said, we finally saw wheat show a little bit of relative strength compared to corn and soybeans.
Yeah, and you know, when you take a look at the Gulf, you'll also notice that inspections earlier on this week came out above the high side of analyst expectations, really recording about 581,000 metric tons of sales there. That was very positive. Of course, tomorrow we'll also have export sales. We're expecting between 350 and 450,000 metric tons for wheat, and that's for, of course, the new crop. We're in the new marketing year. When we look at expectations for corn, we're looking between 150 and 300,000 metric tons for old crop, and then for soybeans, we're looking between 50 and 150,000 metric tons. Keep in mind that last week we did have that nice big reportable sale for old crop for 140,000 metric tons. That should be baked into this week's number. So I would expect if we didn't get any sort of cancellations, we could come out once again on the high side of analyst expectations for soybeans even. Now, let's switch our attention over here to quarterly grain stocks and, of course, the acreage numbers that are coming out on June 30th. That's really what the trade's focusing on. And as we move through the remainder of this week, we're going to see traders kind of positioning for this, and we may get a little bit of an indication as to where the market is really expecting this report to come out. You know, what are you seeing here?
Yeah, you know, Cody, yesterday on GrainTV, we kind of highlighted the acreage situation. Obviously, you know, we hinted that soybeans is kind of the item to watch there. Very large acreage expected. Today, we wanted to take a look at those June 1st quarterly grain stocks, and as you can see here, this first column shows the average analyst guess based on a poll conducted by Reuters. As you can see, 3.7 billion bushels of corn expected there in June 1st quarterly stocks. That would be the largest since 2010. Soybeans, though, is the big outlier here. 378 million bushels expected in those June 1st quarterly stock figures. That would be the lowest figure we've seen since 1977. And wheat in kind of a similar situation, not nearly to the same degree, but 598 million bushels there. That would be the lowest since 2008. So when we're looking at quarterly stocks here, a lot of times there's a lot of focus on corn and wheat because we have a pretty good idea of soybean usage throughout the year by way of the NOPA crush numbers on a monthly basis and then export inspections on a weekly basis. So I think one big question for traders here is how much feed usage was used over the last quarter of the marketing year here. Obviously, one big item that will be impacting that is the size of the U.S. hog herd, which was off quite a bit. But that's something to keep an eye on here as we approach June 30th. These numbers are good numbers to keep on your radar, so when we do get that report, that's going to really help dictate the move that we see. But as I said, keep an eye on corn and wheat in those June 30th reports. Soybeans could be a surprise just based on how tight stocks are.
Absolutely, and you know, if you haven't yet gone over your own marketing plan, your own way to prepare for this report.
Right.
You know, how are you putting protection in place in terms of protecting yourself from price risk if we get a surprise here? Because if you get any sort of major deviation from the expectations here,
right,
we could see the market move significantly in one way or another, and that can, of course, have negative or positive implications here to your bottom line. Logan, we do have prospective planting. You know, we've talked about it a little earlier, but could we just go over it one more time here, make sure that everyone's very clear as to what the expectations are going into this 30th report?
Yeah, absolutely. This slide here kind of shows what we saw from the USDA back in March in the prospective planting report, and then what analysts are expecting based on that poll from Reuters in the June 30th planted acreage report. You can see not a lot of changes expected there for corn and wheat in terms of acres. Soybeans looking for the average analyst is looking for an acreage number pushing 82.2 million acres. So I think that's the big story there. We kind of touched on this yesterday. Obviously, there's very large expectations for a very large U.S. crop, but I think one story that may be even more important here in the upcoming crop year is that we have major expectations for big crops out of Argentina and Brazil. This chart here details expected soybean ending stocks by marketing year in million metric tons. The green bars are Brazil, the red is Argentina, and the blue here is the United States. So you can see that the United States is expecting quite an increase in ending stocks, but our competitors down in South America are as well. That's obviously going to have major implications for U.S. export sales in the upcoming crop year.
That sounds fair enough. Guys, thanks a lot for tuning in. If you have any questions about what we talked about today, give us a call at 877-472-4607. And if you haven't thought about your own marketing plan here, preparing for the June 30th reports, give us a call, and we'd be happy to kind of discuss that and see what sort of strategy may be right for you. So I appreciate you tuning in here. Make sure you tune in Thursday for the export sales report.